Iron ore rallies and lifts mining companies. Let's have a look. Hello everyone, Florian.heise here and welcome to another episode of HeiseSays. Grab your stein of coffee because we're going to talk about the recent rally in iron ore prices. Now if we jump over to this screen here, I'll bring it up. This is from Trading Economics. We can see iron ore is now trading at $122 USD, down from or up from $85 but down from over $200. This is when we were getting all those nice fat dividends from Fortescue Metal Group. Guys, I mean, they made some good profits. But you can see here it's climbing back up. Now, the Australian government, and I'll just bring up this little chart here. This is an example. This is West Australian government's revenue from iron ore. This is their total revenue. 24% of it comes from iron ore. The federal government plans the budget on about $50 USD. So we're still a long way off from that. If we click on the Observatory of Economic Complexity, we can just scroll down. And actually, I'm going to have to sign in, guys. Bear with me. It shows you how organized I am. There we go. Nope, that didn't work. Fun and games, huh? There we go. Now, if we see here, our economic complexity is 79th in the world. I was looking at El Salvador the other day, discussing their adoption of Bitcoin as something of significance. Their economy is more complex than ours. You look at New Zealand. Their economy is more complex than ours, guys. That's why we need to get them to join the Federation. Okay, we need to bring them in. But if we have a look, are you kidding? There we go. What's this? What's OEC Pro? Oh, the new analysis. Okay, cool. But anyway, we'll have a look at this historic data. This is what I wanted to show you. The scale of our iron ore exports. This is a huge part of our economy, guys. $67.5 billion in 2019. And if we click on that, we can see where the majority of that goes to. And you can see we're highly dependent on China for a significant chunk of our iron ore. That's just something to keep in the back of your mind, particularly with all of the political issues going on. So, iron ore's rally hits 50% as the Chinese economic support fans optimism. This is originally from Bloomberg. Iron ore extended its storming rebound from an 18-month low as moves in China to support its embattled real estate sector bolstered the demand outlook. And that's the more you watch the market, the more you realize it's not really based on reality, is it? It's all based on perceptions and what people believe is going to happen, and psychology is a big part of it. Futures in Singapore have climbed more than 50% in just 6 weeks as demand prospects brighten. Authorities in China are encouraging banks to fund acquisition of projects of distressed developers and pushing financially healthy property firms to make such purchases. In addition, domestic banks lowered borrowing costs for the first time in 20 months, and the People's Bank of China earlier this month cut the amount of cash banks must hold in reserve to free up funds. Prices are being further buoyed by increased production at Chinese steel mills after stringent curbs on volumes earlier this year. The improvement in the property and infrastructure outlook added fuel to the expectations of mills resuming production. Holly Futures wrote in a note, adding that the recent start of the winter restocking also supported the demand for raw materials, while environmental controls still remain. Iron ore in Singapore jumped as much as 4% to 200. I'm being hopeful there. To $129.45 a ton, the highest since mid-October before trading at $128.20. 3:35 p.m. local time. Now let's have a look at a company I've invested in, Fortescue Metal Group, and this is from SelfWealth, guys, just some of the insights they have there. When I captured this this morning, and that's, because Sydney still has daylight savings times, don't they, you crazy guys down there. It's trading at $19.44. Now, I bought in when it was a bit higher, and, it went right back down, so I've been just dollar cost averaging in. And I use SelfWealth because of the trade costs are the cheapest, and it's CHESS sponsored, which is what I want. I want my little CHESS certificates. And I mean, here's the thing. If you, as a sponsor to help the channel, if you sign up for SelfWealth using my referral link, we each get 5 free trades. Sure, you have to use them in a month, but, for things like this, for what I'm considering pocket money investing, little money you find here and there, you chuck a little bit on that company, makes it easier to DCA. Something to consider. So we can see as the bids and offers spread is pretty high because the market hasn't opened. I mean, Fortescue is a profitable company. They're a huge iron ore miner. And, Twiggy's looking at alternatives, particularly with his green iron ore that he wants to try and push. So there could be some opportunities there from an environmental perspective. We'll have to see. Now, we can see everyone is buying except the bottom 30% of the community on SelfWealth. It's 20th by ownership, 19th by weight, and 9th by market cap. People are selling to take profits or other, and they're buying because it's a good dividend-paying stock. But, of course, it's completely dependent on just where the whims of the world. So the forecast for a low of $10.95, a mean of $16.82, and a high of $28.01. We can see here it's smack bang in the middle, and the majority of people are bullish, and I voted bullish previously. And the ESG score is B+. So there you go, guys. What do you reckon? Have to keep an eye on it. We'll have to see. Because, I mean, their shares went, what was the low? We can see here. Look at that. I mean, they were low. $13.90 was the low. So this is when I just started, slowly chipping away. I ignored the actual price of the shares. I ignored how much I'd lost because I hadn't lost anything until I sold it. But I just looked at the number of shares I had, and I said, okay, I want that to be a round number, so I'll just keep chucking little bits of money into it until build it up. Did the same thing with Kathmandu. Now I'm doing the same thing with my AGL shares. I'm dollar cost averaging that down. That was that was not really the best time for me to buy it, but that's the fun of the market, guys. I don't need to sell. I'm just looking at building up dividend streams from a whole bunch of different things. So what do you reckon, guys? Are you a fan of iron ore mining? Do you think what's your favorite one? Are you invested in FMG or some others? And do you think this lift in iron ore will be good for Australia? Or we'll have to keep an eye on the Chinese economy? That's the big thing. We're really dependent on it. Anyway, guys, check out this video about just how dependent we are on China for our iron ore exports, guys. It's significant. It's something that can't be dismissed. So we need to ensure relationships are amicable between the two countries, or at least find alternative trading partners. Take care, guys. Have a great day. I'll see you all in the next episode of